Welcome to the Explainer. I am so incredibly excited to jump into this today because we're breaking down a brand new, honestly fascinating predictive data set all about timing the electric vehicle stock market. We all know the EV market moves fast, like lightning fast. But today, we're zeroing in completely on pinpointing those exact buying opportunities. We're going to visualize the precise profits you could make if you manage to do the impossible, successfully buy the dip and sell the top.
I mean, what if you could perfectly time the EV market? It's kind of the ultimate investing fantasy, right? Knowing exactly when to step in, buy up those shares, and exactly when to cash out. It sounds like a total crystal ball scenario. But today, we're actually looking at hard predictive data targets that attempt to do just that across four major EV players. Okay, let's dive into this.
24%. Now, I want you to keep that number tucked in the back of your mind as we go through this explainer, because according to our dataset, there is a massive 24% maximum profit margin just waiting in one specific EV stock, if it's timed perfectly. That is absolutely our ultimate goal today, figuring out exactly where that opportunity is hiding and how the math actually stacks up to get us there.
Section 1, the strategy. Buy the dip, sell the top. Okay, so before we look at the individual companies, we need to get on the same page about this foundational strategy. Every single number we're about to look at today is built entirely on this one core premise: buy the dip, sell the top. It basically means purchasing a stock precisely at its targeted short-term low, so the dip, and then turning around and selling it right at its calculated peak, the top. By hyper-focusing on the exact spread between these two price points, we can isolate the absolute most lucrative buying opportunities out there. Section 2, the immediate move, featuring Tesla.
So out of the four EV giants in our predictive dataset, there is actually only one stock flashing an immediate action signal today. And, well, it happens to be the biggest name in the whole space, Tesla. This right here is what splits our tactics for today. Tesla's current status is an active buy. But on the flip side, BYD, Rivian, and NIO, they all currently sit at a wait status. So the data is telling us that the window for Tesla is open right now, whereas the others, they require a bit of strategic patience. Let's break down Tesla's exact numbers. Right now, the stock is in a short-term downtrend, sitting at a current price of $375.18. Because it's actually already dropped below our targeted buy the dip entry of 382 flat, our model considers it an immediate buy right this second. But the really crucial piece of the puzzle here is that exit target. The data is pointing us to a highly specific sell target of $425.92. Now, what's really interesting about this slide is how perfectly it isolates the profit window, $44.02. That is the exact dollar spread between Tesla's designated dip and its targeted top. I mean, think about that. If you execute the strategy perfectly on Tesla right now, you're capturing over $44 of pure value per share. That's a huge opportunity right in front of us. Section 3, the high-yield waiting game. But what if you're willing to wait? Let's shift our focus over to the three stocks that require just a little more patience. Like we just saw, these are all sitting on a wait status, and just like Tesla, they're navigating a short-term downtrend. But trust me, the upcoming buying opportunities here are incredibly intriguing. First up is BYD Company. The game plan here is to hold off and wait for a targeted dip down to $12.02. If you can grab that entry, you're looking to capture a $1.39 spread per share, riding it all the way up to a $13.36 sell price. And it's also worth noting that in our predictive model, BYD's last recorded critical move targets a dip on April 24, 2026. Moving over to NIO, we're seeing a much lower price point, but a really highly defined window. The data is telling us to hold our fire and wait for a $4.80 dip target. Doing that lets you capture a 93-cent spread on the way up to the targeted $5.80 sell price. Oh, and in this forward-looking data, NIO's last significant move was hitting a top on April 16, 2026. And then we have Rivian. Guys, this is where things get really exciting. Rivian's current price sits at $16.03. But the strategy says, hold on, wait for the dip target of $14.57. If you can actually secure that specific entry, you are positioned to capture a massive $3.63 per share spread on the way back up to an $18.47 sell price. Section 4, the $1,000 profit showdown. All right, so we've looked at the share prices and the target spreads, which is great. But let's make this real. Let's transform these abstract market metrics into tangible, real-world money.
To do that, we're going to run a scenario where we invest exactly $1,000 into each of these perfectly timed setups. And this brilliantly illustrates the real trade-off here between immediate action and, well, patience. If you take that active buy on Tesla today, you're looking at a very solid 10% gain. But look at the potential if you wait for the targeted dips on the other guys. NIO offers a 22% gain, and Rivian is just dominating the chart with a staggering 24% gain.
Let's look at the exact hard dollars here. At its targeted dip price, a grand gets you 3 shares of Tesla, which nets you a $105 profit at the top. For BYD, your $1,000 buys 75 shares, yielding a $117 profit. NIO's much lower entry point means you can scoop up 160 shares, turning into $216 of profit. And then there's Rivian. Your $1,000 secures 62 shares at the dip, resulting in an absolutely incredible $239 profit when sold at that calculated top. I mean, this clearly shows how capitalizing on the right buying opportunity, and honestly, just exercising some patience, can really pay off.
And there it is, $239 of pure profit on a $1,000 investment. This officially answers that 24% teaser we talked about at the very beginning of the explainer. Rivian holds the absolute maximum profit margin in our entire dataset, provided, of course, you have the actual patience to wait for that $14.57 dip. Section 5, Next Critical Market Dates.
So, if timing is quite literally everything, when exactly do we need to be paying attention? Let's guide into the final stretch here by plotting out the upcoming predictive dates to watch as these short-term downtrends actually play out. Here is exactly how the timeline shapes up in our forward-looking model. The action kicks off in late April, with Tesla's critical date on April 30, 2026. Right on its heels, NIO hits a critical date on May 1st. Then we have Rivian on May 6th, and finally BYD rounds out the group with a critical date on May 11th. These are the specific, predictive days where you might find your first or second chance to execute these precise buy or sell targets. So mark your calendars.
So what does this all mean for us? It really all comes down to this core trade-off. The predictive data has perfectly outlined the buying opportunities for us. So do you jump on the active signal today and secure a reliable, solid $105 gain with Tesla? Or do you exercise patience, carefully monitor those critical dates in May 2026, and wait for that massive $239 payday from Rivian? That, my friends, is the ultimate question of market timing. Thank you so much for joining me for this explainer. I hope this completely changed how you look at these EV charts. Keep your eyes on those targets and happy learning.